we're finally seeing this movement in the market that we've been talking about since the big drops in June and July. And we follow the 100-day moving average in gold very closely. And we're at 1222.70 as I record this on Wednesday. But what we're looking for is a 1229 close. And my friends on Wall Street, and I've talked to three of them, are all telling me the exact same story. If gold can close above 1229, they think it'll make a jump to the 1256 area for the next resistance on the 100-day moving average. So the technical people are sitting there that use logarithms and different ways to enter the market. So we're still $6 short. We need to close above 1229. If we get that, we do expect that we'll get the next $25 to $30 before we have more resistance. So just follow it this afternoon as I record this on Wednesday. We'll get the Federal Open Committee notes, which will give us a little indication as what the Fed is thinking, even though we're continuing to hear they'll probably raise rates in December. And if they do, you can watch for another sharp sell-off in the equities market. The other thing of interest, it's just hard to believe, is the Federal Reserve has started a new product called a 2-month Treasury bill. The debt is compounding so fast in this country that just 3 or 4 years ago we had a $12 trillion debt. Now we're at 21 trillion and flying up, and we're having to not only we can't pay off any debt, so we have to roll every piece of debt over, whether it's a Treasury bill with maturity up to a year, Treasury note 1 year to 10 years, Treasury bond 10 years to 30 years. When they come due, we have to pay the interest and roll that over while we're issuing new bonds. I mean, this thing has gotten now where the liquidity for these bonds with interest rates rising and the price of the bond going down, the Fed's having to print and make this. And as I've said many times, and many people have said many times, the US dollar will not survive this. There's never been one currency in the history of the world. Go back and look for yourself. Not one currency in the history of the world has ever survived a fiat currency. And certainly everything we have is money by decree. It's printed by the Fed, loans it to the government pays interest, it compounds. We're paying over 500 billion a year, over 500 billion a year in interest on the debt, and continue to issue more debt. I've said it many times. Go to usdebtclock.org, usdebtclock.org, and look at it. And in the far right-hand corner, look at what the price of gold and silver should be based on the creation of money. We've seen the price of the fiat double since 2008, and yet, gold has not quite doubled. It's gone from 800 to 1225 where it is today. So it's really behind schedule, and we think these jumps will help catch it up. But there's a lot to be watching as we see what the Fed's going to do. And if they do raise rates, I think it's going to be very detrimental to the real estate. I think it'll start a real estate contraction. I think it'll start a equity down. The bond market would already be in a downward trend, and as the interest rates go up, the bond market comes down. So we expect all that. We see gold continue to claw its way back toward 1,300. We're very optimistic it'll make it there in the first quarter of the year, if not the last quarter of this year, but it's clawing back. And on silver, we're still getting rumors out of Asia and Singapore that JP Morgan and other large market participants are continuing to cut their shorts. We look at the COT reports every Friday, the commitment of traders, and see how many short contracts are in and how many long contracts are in. And we've seen a change the last 3 weeks, and we're seeing these short contracts, less of them, and more of the long contracts. And certainly if any major participant whether it be JP Morgan or anybody else, decide to go long, we could see what happened between 2000 2011, where silver went from $3 and something up to $47 for about a 15 times gain. So you want to stay in silver, you want to keep cost averaging, you want to add 20 coins, 30 coins, just keep buying with your money. And at this low risk on silver, yes, it's down, yes, it's disappointing, yes, we have paper losses on it, but it's not definite. With everything else going on, silver looks to be maybe the best product for the next 3 years from where it sits right today. And then platinum has done everything we said it would do on this show a few weeks back. It's gone from 756 to 825 and now up to 850. And it's just beginning. We still think we'll see transfer of money from palladium to platinum for catalytic converter. We're going to see the fuel use technology for electric cars soar the next decade. We're going to see the smart TVs, smart 5G telephones with platinum in the face. All this is dragging on demand of a metal that is 40 to 46 times more rare than gold. And the price is about $400 an ounce cheaper, when history tells us platinum 90% of the time since 1972 has been higher than gold during the year. So you find an incredible buying opportunity on a metal that has so many industrial uses, and it's very rare, it's hard to mine, it's very unique because of its melting point, and we're happy to discuss that with you. But watch this gold closely for the 1229. If we can close above it, we'll be, we think, move to the next level. So once again, if you're interested in a precious metals, self-directed IRA, give us a call. We'll tell you how to get a custodian. We can be your broker and representative, but you'll have to have a custodian. We'll show you how to roll it over. And you can reach Dan or Kathleen or I at 800-247-2812. That's 800-247-2812. And we'll be happy to discuss that. And certainly when you're buying gold or silver or platinum, there are different products with different premiums. For you new listeners, when I say the price that you pay is a spot price plus a premium, that's what I pay. I pay spot plus a premium for a particular product, whether it be gold, silver, or platinum. You pay spot plus premium plus our commission. Plus, if you're interested in storage, we have the lowest storage rates in the world, and you can check anywhere in the world and see if you can find a cheaper storage rate at a COMEX warehouse than we have. It's unbelievably cheap, where if you don't want to take delivery, we've got a great alternative for you. And you can store in the US, Canada, Singapore, or the Cayman Islands, and we can walk you through that. So hopefully call us with your questions, and we'll see what happens this week and be back next week. With this week's Precious Metals Market Update, this is Tom Cloud signing out.